Okay, picture this for a second. A future where we don't have to level rainforests to get the metals for our electric cars. Instead, we just kind of scoop them up from the deep ocean floor. I know, it sounds like total science fiction, but one company is betting billions that this is the actual future of mining. So let's dive in and see if the ocean floor really holds the key to our green future.
And that's really the central question driving this whole new, pretty radical industry. The thesis we're breaking down today argues that the answer to securing our clean energy future is literally miles beneath the waves in this vast, untapped resource. At the very heart of this story is a company called the Metals Company, or TMC. And look, they're not just proposing a new mine. They're proposing a completely new way of thinking about where our most critical minerals even come from. So what are they actually trying to collect down there? They're called polymetallic nodules, and they're pretty much what they sound like, these potato-sized rocks that have just been sitting there forming over millions of years. They've even been nicknamed batteries in a stone because, well, they contain high concentrations of the exact metals we need for EV batteries and all sorts of green tech. But you gotta ask, why go to all this incredible trouble? Well, the argument laid out in the source material is that our current way of getting these metals is, to put it mildly, deeply flawed, both from a geopolitical standpoint and an environmental one. First, let's talk geopolitics. The West is in this massive race to secure its own supply chains for critical minerals, which really means trying to reduce its dependence on countries like China. And get this, all 4 of the main metals found in these nodules are now on the US critical minerals list. So this isn't just an economic issue anymore, it's being framed as a matter of national security. The second big argument is all about the environment. The analysis projects that this method of deep sea collection would produce 70% lower CO2 emissions than doing the same thing on land. And maybe even more amazing, it's expected to generate 0 solid waste. So the argument positions this as a pretty clear choice. Traditional mining often means deforestation, displacing communities. This new approach shifts the impact to the seafloor. But, and this is a huge but, that impact is at the center of a really fierce global debate. Many marine biologists and environmental groups are warning about potentially catastrophic, irrevocable damage to these unique, slow-growing deep-sea habitats. They've even called for a global ban until the risks are fully understood. So the crucial point here is that it's a profound trade-off. Okay, so how does all this tech and geopolitics build into an actual investment case? Well, behind it all is a massive financial bet, and it all centers on something called a valuation gap. To put it simply, a valuation gap is just the disconnect between a company's price tag today and the potential value of its assets if everything goes according to plan. It's that space where investors are basically betting the market is wrong today about what something is going to be worth tomorrow. And according to the technical assessments that are cited in this analysis, the audited value of the mineral resources TMC has the rights to is a staggering $23.6 billion. That's the potential prize we're talking about. But what about the company's current value on the stock market? It's floating around just over $2 billion. See that? That is a massive difference between the audited value of the stuff on the seafloor and what the market is willing to pay for the company today. And that right there, that's the absolute core of the financial argument from the source. It suggests that if, and it's a big if, the company can actually start commercial operations, its valuation could re-rate by a factor of 10 just to close that gap, a potential 10x return. Now, I know what you're probably thinking. This all sounds incredibly ambitious, maybe a little too much like science fiction. And many critics have said exactly that. So let's look at the key steps the company has actually taken to prove this concept is for real. This analysis points to some major milestones that have taken a lot of the risk off the table. They partnered with the engineering giant Allseas to create their collection vessel, the Hidden Gem. Then they actually tested it successfully, lifting nodules from 4.5 kilometers deep. They even secured a huge customer, the commodity titan Glencore. And maybe most importantly, they've started to pivot towards a US regulatory path, which aligns perfectly with those national security interests we talked about. So what comes next? They've made a lot of progress, but the path from here is all about clearing those final regulatory and commercial hurdles that are standing between them and full-scale production. Here are the key events you'll want to watch. In early 2026, the public hearings with NOAA in the US will be a critical step. On the global stage, the finalization of the International Seabed Authority's mining code could open the floodgates. And on the business side, the thesis suggests we should be looking for potential deals with major automakers who are desperate for a cleaner supply chain. So
When you put it all together, how should you think about this whole thing? Well, the source material frames it not as some safe bet, but as a calculated, very high-stakes wager on a brand new frontier.
This quote from the source really just nails the essence of the investment thesis. It acknowledges the risk by calling it a lottery ticket, but then it immediately highlights the foundation for the bet. Billions in verified resources and a leadership team that has navigated incredible challenges for over a decade. So, to boil it all down from the trader's viewpoint in this analysis, it's seen as a high beta, asymmetric opportunity. That just means it's more volatile, but it also has the potential for way bigger returns. The key argument is that massive valuation gap with a potential for that 10x re-rating, but it's all balanced against some very real regulatory, environmental, and execution risks. It's a classic high-risk, high-reward play. And that leaves us with the ultimate question, doesn't it? Is this a necessary solution for our clean energy future? A way to get critical metals without tearing down forests? Or is it an unacceptable gamble with the deep ocean, an ecosystem we're really only just beginning to understand? The debate is just getting started.